Traders, Anthony here. I'm looking at the US500. So we're reaching into new highs here. See this previous high? It's now support. We've broken through. So what's happening here is this is cleaning out any stops that are resting above here. It's a big level. It's a really big level, and it's smashed through. Let's just have a look at it on the daily. So we're looking at these buy stops that are sitting up here above this expansion to the downside, right through here. Okay, it's pushed right into it, and you can see here that we've had a bit of a reaction. We'll go down to the lower time frame, but you just want to be a little bit careful here because they have to engineer liquidity to be able to push this through. And once they crack this level here, well, you know, they would hit the liquidity here. You can see, and it's reacted off that. They're going to need sell-side liquidity to continue on. Right, so this is where they've been able to unload at this point. We'll just go down to the 4H. I'll mark up this as well, daily. Let's grab that, and we'll call that, just call that support zone. Done. Go down to the 4A. So we've got these two levels here on the higher time frame on the daily that are of interest. And, you know, you want to understand now that anything pushing forward needs liquidity to be able to function. The market needs liquidity to be able to function. And where are they going to find liquidity now? Once they've moved into new highs, they have to drop it back. So how far back? Well, that's the question, but it's got to drop back in before it can continue on. Okay, they can't just buy up in here into nothing, right? They've got to buy. They've got to pair their orders with sell-side liquidity under here. So I'm thinking a decent pullback could be the thing here. Keep an eye on the DXY as well, the dollar index. We want to see how the US dollar's faring. A weak dollar will cause money or funds, capital to pour into risk assets. All right, a strong dollar, and we should see money move out of risk assets. So at the moment, the dollar. And we'll just have a quick look at that. Where are we? DXY, and then we'll come back to this one. Okay, so at the moment we're seeing the dollar is under pressure. Have a look at it on the daily. Yeah, so I mean, if it holds up here and we see it push higher, expect the stock markets to roll over, I would think. See how this is trading into this level here? Right, so the dollar has traded into, well, these stops resting under here would be a target. They've hit, yeah, they haven't quite reached right in here yet, so that could be a thing. In any case, this is pushing down into this bullish daily order block here on on the daily time frame. So just be careful. And we've got an imbalance up above as well on this time frame. See this thin candle? Maybe it could look to trade back through. Okay, that could be a potential target. Anyway, we'll go back over to the US500. Yeah, I would be careful up here. Now, here's my thing with this. I'm always looking for a discount in a bullish market. And I'm going to be looking at, well, I prefer these swings. Let's have a look at this. Swing low, swing high. Whoops, hang on a sec. Wrong one. Let's grab that. Swing low, swing high, retrace, buy. Swing low, swing high, retrace, buy. Swing low, swing high. I'm just looking at this price swing. And for smart money to get involved, they need two things. One, liquidity. They need to get in at a discount. They're not going to be looking to buy at a premium. Right? So you want to mark up your chart. And I like this 4-hour time frame. We'll pick up this here. see this thin candle here. This is an imbalance, right? So what's happened is it's pushed back down and rebalanced. Let's just go down a bit further. Yeah, see, we've got this imbalance under here that could be a target at some stage. But I'm always looking at the chart for ranges here like this, for example, with this bullish, thin bullish candle. Imbalance, okay, bullish imbalance. It's pushing one way, bullish, and we've got nothing left and right of it through here. So that's a target, and we'll just mark that up as a 4-hour target. No, actually, sorry, my bad. We'll mark that up as an imbalance target. Imbalance, right? Midway through there would be a good target point, and it coincides with this value area on the 4H. Right, so we could mark that up and just call it a 4H. So we have this nested area here, the imbalance and the high of this value area range here. Now the other thing I'm looking for is the Fibonacci retrace, and I'm going to go with this bigger swing. See this 50% level on my Fibo here? All right, this is my entry point. If I'm going to be long and I want to speculate on the 4-hour time frame, that's what I'm going to be looking for. Speculation, of course, you know, you could set a limit order buy, and how does that work out? Well, you know, if we did that back in here, we're looking at swing low, swing high. Oops, hang on a sec, grab this. You know, possibly a buy there, possibly a buy there, a buy here. So on these retraces, we buy Fibonacci 50% to 618, and if you pull your fib, you'll see that was an entry point there. This one you might have missed. This one was an entry point. So keeping this strategy, that's a potential entry point. Now there's a couple of things you can just undo some of this stuff. You can speculate, and that carries a higher risk, of course. You know, we could even see a deeper pullback. It just depends on the US dollar. But what I'd be looking for if this trades down into this level would be, and we'll go down to a lower time frame. So this is the 50 to 618, coincides with this imbalance. It coincides with this balance area down in here on the 4-hour time frame. So then if we go down to, say, a 15-minute chart, and I've pointed this out numerous times in my other videos. All right, so there's our chart mapped out. So we know we've got a bit of a roadmap. You want to see this, and by the way, see this. Now here we go. Here's the thing, right? Let's be really careful here, guys. Look at this price action. We've got this range, and I'm always looking for this. I'll grab my pencil. All right, I could be wrong with that. Range builds liquidity above and below, but I'm always looking for the fakey shaky chart pattern. So we get a bit of a fake out, and what happens is that builds liquidity in the form of buy stops. This move here to the downside builds more liquidity, okay, as this traps or pulls sellers into the mix. Then what happens is they push it up and they take out these stops, and then we get the displacement. So I'm going to be looking for a big strong candle to the downside. I'm not interested in buying at this level. If it travels north, and it could do, I'm happy to let it go. I don't need to get involved here. I want to get in at a discount. So that my thought process is that I'll be looking for this to shift gears here, and hopefully we see lower highs and lower lows forming here. Down around this area here, well, I mean, you want to see the same thing that happened here. You want to see occur under, right? Let's just give us a bit more real estate here. So I'm going to be looking for this to set up. Now, wherever it sets up, it could be here, it could be lower, who knows? But I want to see the range, a bit of a fake out, a shake out, and then I'm in long. Very similar situation to that, but in the opposite direction. The fakey, shaky chart pattern. The fakey, shaky chart pattern. It's the only chart pattern I'm interested in. I take no notice of any other chart pattern. This is it. And these horizontal levels. I guess influenced by ICT, and I'm a little bit biased, but that's how I look at the charts. All right, guys. I mean, that's my take on this one. Wait for this setup. Wait for this to play out on the lower time frame in a support zone, and that could be an opportunity to buy. So, I mean, with that, I think I'll wrap up the video, and I'd love to hear your comments. Definitely say something below. Share the love. With that, I hope you have a great day, safe trading, and we'll see you in the next video.